All right, guys, today I am going to talk about cap rate, what it means. I'm going to break it down. A lot of you probably hear this term all the time. A lot of you know what it is. A lot of you may not know what it is. Today, I'm going to break it down and explain to you what exactly it is. Now, basically, the cap rate basically tells you what the property's income producing potential is, okay? It basically tells you what a property is expected to generate return-wise every year, all right? Now, how do you calculate what a cap rate is? You got to take the net income and you divide it by the value of the property. I'm going to put parentheses, I'm going to put purchase price. That's when you are looking for properties. Now, most of the time you're using the cap rate when you're dealing with multifamily properties. That's 5+ units or more, okay? Now, you should know what net income is. Basically, gross income minus the expenses, that's your net, okay? Let me give you an example right now. Let's say you're browsing around, you're looking at, let's say, a 40-unit apartment complex that is listed for $1 million. So we're going to put the $1 million here because it's here. Purchase price, okay? Let's say you look at the numbers and their net income is $120,000 per year. That's what that apartment complex generates net every year, $120,000. Now you divide $120,000 into 1 million, and that equals a 12% cap rate. Okay, that means that this property is going to have a return on investment at 12% each year from the income to the value of the property which you're purchasing for. All right. Now, this cap rate can also tell you how risk that asset is, which means that the lower the cap rate, the less risk it is. Okay. The higher the cap rate, the more risk it is. So basically, the higher the cap rate, it has the potential to make more money, but more risky, more problems, okay? The lower is less risky and less money. Now, you see a lot of these luxury high-rise apartment complex, they have low cap rates. Their cap rates are between 5 and probably 6.5%, okay? This means that they have very low risk, high income, but very low risk, higher expenses. Is probably in a very expensive area. That's what I mean, that if you even look at the cap rate, it can tell you exactly the potential and how risky that property is. If you have a 12% or higher cap rate, 15%, that is in a more, I guess you can say, a crime area and things like that. Now, I'm gonna give you another example. Let's say that you're looking at a 10 unit that's 300,000. Okay. All right. Let's say the income that is bringing in net income is 22.5. Okay. So it's 300,000, and the net income is 22.5. This is a 7.5% cap rate. 7.5%. So that's a 7.5% return on investment I'm going to make every year from this 10-unit apartment complex. So there you go. That's how you understand and break down and use the formula of cap rate to determine if this is a good buy or not. Me personally, I like to hover and stay closer to 10%. I like to be between 10 and 9% cap when I'm looking at multifamily properties or investments in general. There you go.